It's like the Winter Olympics here on Wall Street. Stocks are competing to steal back their records. And joining me as a guest commentator is Matt Cheslock from Virtu Financial. Hey, Matt, how's it going?
Good, boss. How are you?
I'm good, thank you. And I really do feel like I'm watching the Olympics. I mean, we have this huge open with triple flip digits, but judges are giving volume a low score. Why is that?
Yeah, you know what? I think we're showing a little bit of fatigue. We saw it in the morning. You know, it opened stronger, but it just didn't have that conviction that we've seen. We're trading on this hope that we're going to find inflationary pressures. And that's going to be a good thing because the economy is going to be heated up. But, I'm hoping that they're more consistent, this data. It's not just a one-off event. You know, a lot of it's predicated on what oil's done. And oil had a tremendous December and January. Now we're seeing it come back to earth here a little bit. So that may play out in some of the CPI and PPI numbers in February and March.
And that's the puzzling thing, Matt. I mean, the U.S. could be winning gold in other sports, but definitely not when it comes to their currency. How do we have a weaker dollar amid growing economy and rising rates?
It's a good question. And right now, we saw, 90 was going to be an important threshold. We closed above it for a couple days, and we broke down through it, and significant moves to the downside. And, the dollar volatility is as strong as it's been. So that's something that's been lost because the equity market has seen so much volatility. But that's a great question. And one that we can't just talk about it anymore. There's going to have to be some kind of action. But I think there's a lot of conflicting signals out there, and that's why this market has tended to be rallying because the path of least resistance was to the upside. But so it's not the 10-year yield. I mean, that's not what caused this sell-off. There's a lot of other things that are out there.
Can you explain any of those?
No, but I think there's a myriad of things, and that's the problem. I think the fundamentals of the stock market are still good. No one will argue that. What the Fed's path will be going forward, no one's going to argue that. That's probably going to be 3. With a whole new Fed in there, I'm going to find it hard to believe that they're going to go more than that this year. But they'll be pretty good about forecasting, hopefully, if they take Chairwoman Yellen's path. But you look at the dollar, you look at the 10-year, you look at oil, you look at wages, right? I mean, wages. So the new minimum wage came into effect in January, so that played into it. Is that a one-time event? Is that sustainable? You talk about healthcare costs and things like that. Is that sustainable? So there's a lot out there that hopefully we'll get a better handle on in the first quarter, not just the first reading.
Yeah, that was a strange read in the CPI, how hospital services became so much more expensive. But when we take a look at the weaker dollar, I guess you could say that large caps are like, ooh, this is nice for us. But this is really interesting. Last week when volatility went off the ski slopes, the VIX jumped, but the Russell volatility did not keep up with it. Does that show that big caps are more vulnerable?
I think a lot of people were anticipating some kind of reaction in the big caps, and they got it, and they got a massive move, and it's hard to stomach a 10% move in 2 days when you're going to step in and buy it. So the volatility, I think, index is a little misconstrued right now, or at least misunderstood, and that's giving pause to investors getting back in. The Russell's a much bigger picture, right, of what you can invest in. It should be less volatile. They're smaller cap names, and so I think the VIX itself is working itself out. We saw yesterday when the market was flat, the VIX was down 5. That doesn't make any sense. So there's still some that the VIX, it's still trying to work out what it's worth synthetically and how the market will adjust to it.
We'll definitely keep our watch on that very closely. And that about wraps it up of the market segment of the Winter Olympics. Let's thank Matt Cheslock as our guest commentator. And Matt, thank you so much.
My pleasure, Vaz.